In this example, we'll be doing practice exercise 15-1A that can be found in your textbook on page 694. We're going to be journalizing bond investment transactions. In the example, it tells us to journalize the entries to record the following selected bond investment transactions for Super Club Trust. In Part A, they tell us that we've purchased for cash $400,000 of Tyler City 6% bonds at 100 plus accrued interest of $2,000. In Part B, we're going to record our first semi-annual interest payment. And in Part C, we sold $200,000 of the bonds at 98 plus accrued interest of $1,000. Remember, in this chapter, we're an investor. We are purchasing investments. So, for Part A, again, they tell us that we're purchasing for cash Tyler City bonds at 100. That tells us that we're buying it at 100% of the face value. So we journalize our investment in Tyler City bonds. It's an investment, so it's an asset to our business, therefore it is debited for $400,000. They also tell us that we pay accrued interest of $2,000. This bond pays interest semi-annually. So for every 6 months, we will receive an interest payment. However, when there's accrued interest, it means that we've purchased the bond in between those interest payment dates. So the person or company that we're purchasing these bonds from have been the bondholder for a few months. We'll then be the bondholder for that remaining 6-month period. But we cannot record interest revenue for a full 6 months if we haven't been the bondholder for that full 6 months. So here we're going to write interest receivable of $2,000. The company that we're purchasing the Tyler City bonds from have earned that $2,000 for being the bondholder since the last interest payment. However, at the next interest payment, we are going to get the full 6 months worth of interest. So we're giving the existing bondholder how much they've earned so far. And we're paying them cash for the bonds in the total of $402,000. In Part B, we're going to receive that first semi-annual interest payment. So before we can do our journal entry, we have to do a calculation for the interest. And we know for interest, it's the face value of that investment bonds that we're purchasing, multiplied by the interest rate, and multiplied, because it's semi-annually, by 1/2. So our face value is $400,000 that we're going to multiply by our interest rate of 6%, and then we're going to cut that in 1/2 because it's semi-annually. So on a semi-annual basis, we will receive $12,000 from this bond. We again are the investor, so we are receiving the cash in the full amount of the $12,000. However, we have not been the bondholder for that full 6 months, so we cannot record interest revenue for the full $12,000. We are now receiving back the $2,000 that we had given previously to the prior bondholder, and the remaining amount is interest revenue of the $10,000. In Part C, we have decided to sell $200,000 of the bonds at 98 plus accrued interest of $1,000. Again, that 98 represents a percentage of the face value. So again, before we get started, let's do our Part C calculations. They're telling us that we're selling $200,000 worth of the bonds, and we're selling them at 98, meaning we're selling them at 98% of that face value. So in fact, we are selling these bonds for $196,000. We're also receiving $1,000 in cash for accrued interest. So we are receiving cash for the sale of these bonds. We're getting the $196,000 plus the $1,000 in accrued interest. However, we are selling part of our investment in Tyler City bonds that we purchased back in Part A at 100% of the face value. So it went on our books at $200,000, but we're only selling them for $196,000 in total. We are receiving interest revenue of $1,000 for the accrued interest that we have earned since the last interest payment. We bought the bonds for 100%. We're selling them at 98%. So that means we have a loss on the sale of our investment for the difference between our credits and our debits. That $4,000 difference, again, we can see right here. We're selling them at $196,000 when we had purchased them for $200,000.